Analyzing it, PAT at 5130 crores. This is exactly in line with what we were expecting, and we'll just bring up the instant analysis for you in a moment. But adjusting for the tax reversal, the number is pretty much in line with estimates at 5130 versus a base of 3726 crores. This looks like a good number. That's a 40% increase in earnings. So be mindful of that performance just right now. And that, of course, will pretty much set the stage. Now, the profit number, because of the tax reversal, is not the key number to watch out for. We are looking at what they've done in terms of revenues. We are expecting a quarter-on-quarter percentage growth of 1% or so. And on EBITDA margins, we're expecting margins to be absolutely flat. So, yes, the profit number is in line with expectations, but what's most important is what they've done on the revenue side and how they see the guidance into quarter four for overall revenue performance, and how they're looking at the full year guidance for FY18. And I think the number over there that's come in is one of 5.5% to 6.5%. So the company, pretty much on expected lines, has played by the script and has said that they are retaining their FY18 constant currency revenue growth guidance between 5.5 to 6.5%. That's your headline. I'm still seeking more clarity on the revenue picture, because that will tell us how the business environment is shaping up in terms of deal flow. But I think part of it is out the fact that, you know, they believe there is no reason to alter the FY18 constant currency revenue growth guidance. Is something that the market would take sigh from, because at least, fine, they've not upped it, but they've not revised it lower as well. Trip Chaudhary joins in with his analysis on the numbers. Prima facie, Trip, I want to particularly first focus on the fact that Infosys has maintained FY18 constant currency sales growth at 5.5 to 6.5%. This is what Cogensis is putting out. That would come as a sigh of relief. Yeah, they've not upped it, but they've not revised it lower as well.
Yes, I think they have maintained the guidance, and that is a sign that the business is stabilizing. Actually, I thought they may increase it because the IT environment in USA is improving. The IT spend is improving. So I think this is they can achieve the guidance they have given, because the macro conditions are gradually improving.
You know, TCS reassured markets because they've said that, look, all problems are behind them and the BFSI vertical will improve. Do you think we could hear a similar kind of a tone from Infosys also today?
They will say, but based on our research, I mean, there's a dramatic change over the last, I would say, quarter or so. The IT budgets have increased. So that is the biggest change. But different verticals have different IT spend environment. But overall, I think the tone of the industry is improving.
Gaurang, if the tone of the industry is improving, why is Infosys still sticking to their broad guidance? Are they playing it safe? Are they playing it easy? Do you think they don't want to take chances now where, you know, earlier they had given a guidance and then they were forced to cut back the guidance 2 times in the last 2 years?
Nikunj, is that question for me? Nikunj?
Right, Gaurang, that question is for you.
Okay, great. Good afternoon, Nikunj. Well, you know, with the kind of baggage that Infosys was carrying over the last couple of quarters, and of course, the publicly open spat that was there with the earlier management and of course the founder member, I think conservative approach has been the theme over the last many historical quarters that you and me have witnessed. And my sense is that it is more important now for the new CEO, Mr. Parekh, and the founder member, Mr. Nandan Nilekani, to regain the confidence of investors, big and small, and draw down a business strategy which will be sustainable rather than give figures which would be revised later on towards the downside. So, I mean, whatever number we have seen for Infosys so far, as well as for TCS last evening, and I've been maintaining, Nikunj, that Indian IT sector over the last 1 year as a brokerage house, we have been positive. We also maintain that the recovery process will be slower, painful, and gradual. But it's not like that you have to write them off completely in case if you have a long-term investment idea. As a disclosure, since I've taken the names, it's prudent on my part to give the disclosure on Infosys and TCS. We have remained positive, and we still remain positive.
Right. But just given where, the stock stands from a valuation standpoint, Gaurav, you believe that the downside is now limited on the stock? Much of the bad news is part of the cycle slowdown is in the price. So, if one was to take an optimistic look at these numbers, say that fine, they're indicating that the environment is stabilized, then could that be reason enough for the stock to get revised higher?
I would, Tanvir, and good afternoon to you as well. And my sense is that more importantly now what the market and participants and investors would want to hear from the management is the growth trajectory and where they want to take the business and which are going to be the areas. Digital cloud, artificial intelligence, etc. Now these are all, high-end businesses wherein you have a better margin as well. So I am of an opinion that yes, possibly the worst is behind us. And there could be, and remember one thing, these numbers and the second quarter numbers are in the backdrop when you had a lot of issues as far as the global businesses were concerned. Now you have a lot of more clarity in terms of the global businesses, especially in the US, the kind of exposure that the Indian IT company has. And there is a great opportunity in the domestic market as well. So I hope that the bad days are behind us. And like I mentioned earlier when I was in conversation with Nikunj, that recovery process was definitely there. The only thing is how much time you want to give to your investment in IT companies, especially names like Infosys and TCS.
Okay, Pankaj Sharma and Sarabjit Kaur Nangra both join in with their views as well. We have the best 360-degree perspective that you can get on Infy earnings, which are broadly in line with estimates, and the overall environment looks stable in them maintaining their guidance for FY18. Pankaj, I'll come to you. Reason enough to be optimistic that this is the bottom of the cycle, things can only look up from here?
Yeah, I think I would agree on that because whatever we have seen in the case of Infosys specifically in last 6 months, it has been a turbulent time and there were also a lot of skepticism about how things will look like after all the changes which we have seen. So I think it is not a bad result per se, and also in terms of their approach towards guidance and how they performed in third quarter, I think on a comparative basis, it looks like a decent result. So I would be optimistic about Infosys in particular going forward and how it would perform in the market in CY18. And also I think I would like to add perhaps that in a comparable basis, I think it's a better result than TCS because whatever, as I said, that whatever we have seen in Infosys cases specifically, I think these numbers are largely acceptable to investors and markets. So I think this is a decent result.
Sarabjit, come to you next, and I would just want to take Pankaj's point forward. It's Infosys, why you would credit these numbers a bit more than TCS is because they've gone through a painful period of transition, and it seems like their client relationships have held steady through that tough, challenging period. So do you think that it only gets stronger from here, whether it's about client budgets, whether it's about improved spending, whether it's the US environment picking up, and more importantly, how they rework their contracts?
See, I'm a firm believer for a pretty long time in IT sector that IT Indian services globally has consolidated its position with large caps occupying a large market share in the IT services, and that's the reason that these companies are now occupying a larger market share in comparison to mid cap and small cap IT companies, which most of them have vanished out of the picture. Now, given the scenario which the industry is placed right now, I think people are concerned that there is a transition happening, technologies change. I think this is nothing new actually. To put in perspective, there was Y2K which happened when Indian companies were told that they are a complete write-off. No, it's a digital technology. I think the terminology has changed, technology has changed, but I think what makes a great company and a great industry continues to be there in place. So I'm not worried about the noises which keep on coming with respect to whether there's a transition, whether the old services are getting commoditized. Going towards a commodity nature, I guess that's the nature of all the industry where the innovation rate is so high. Technology is the one industry where the innovation rate is so high. Obviously, a technology will become absolute after a few years. So our forte or our way to create wealth will be to identify companies which can do those transitions faster. So in that case, I think TCS and Infosys time and again have proven that they have the capability, they have the resources, and they've utilized them in a proper direction so that they can capitalize. To give an example, apart from Infosys, TCS announced yesterday the most biggest digital deal and order, in fact, in the digital area so far they have bagged, which even doesn't compare to their older services order. So it is a conviction which I have that these companies have the capability, they have resources in place, so the transition is smoother for them rather than for other companies. So what about the earning numbers? Now, last, I would say one and a half year has been tougher for most of these companies. Earlier it was Brexit, then came US, financial services and retail not doing that great, and to a certain extent energy segment not doing so well. So I think these are macro trends. It's nothing to do with the capability of the company. And that was reflected in the way the stocks have performed and the way they were battered down, though most of them have moved up now because of the buyback and probably in some cases higher dividend payout. So these are all signs that these cycles do come and go. So as to your question whether we have touched the bottom, I would say probably yes. I think next year should be a year where, from where I see the IT sector right now, I think probably this year hasn't been bad. It's equal to some extent to the last year, barring Infosys, which had its management issues and has kind of downgraded the guidance, I would say. But most of the other companies have delivered. HCL Tech and other companies have delivered. So even Tech Mahindra for that matter has been delivering. So I guess if I have to put broadly, I guess next year should be better. And I believe that possibly, I know the more color will be given in fourth quarter rather than probably this quarter. But I think things should look up. If I have to go by TCS numbers which were declared, and I don't know what Infosys's breakup in terms of industries, but if I have to take a clue from yesterday's results of TCS, I think even the bigger segments are bottoming out or showing a sign that they are moving out of the negative territory. So I think so, and to mark my point, I would say TCS volume growth 1.6 was the highest in last couple of years. So
okay, Pankaj, this question is coming your way. Pankaj, do you think now that there is clarity on the US tax bill, banks could start outsourcing more? US economy as it is revving. Could 2018 be a year of radical change for the Indian IT sector, courtesy the BFSI segment and North American growth?
I think there are two parts, because this is something which is slightly unrelated. There was news flow that Walmart has increased the minimum wages they are paying, and it has something to do with the tax restructuring in the country. And I think it's a very valid assertion that now banks and in general BFSI segment would be more keen and more open about increasing the spending and how they would look at the IT budgets. But I think there is another question. One is that whether the Indian IT companies BFSI space, and that is good for IT spending, but whether Indian IT companies would be the beneficiaries to that extent, I think that is something which is still to be seen. So overall, I would be positive, but I think we will need some more time to understand whether Indian IT companies are benefiting to the extent others would.
Right. Gaurang, let's talk about the pecking order now. TCS, well, it's at 17, 18 times. Infosys, sub 15 times and HCL Tech also sub 15 times. Where do you think the outperformance in IT sector will come now? Will it go back to TCS because of comfort and market share, or will it go back to HCL Tech, which has delivered and has never got its due?
Nikunj, that's a very difficult one that you've thrown at me. We remain positive on all the three companies, TCS, Infosys as well as HCL Tech. And my sense is that, that concern that a lot of investors had as far as Infosys and the issues that bogged down the company over the last 6-8 months. The good thing is that's a thing of the past. We have seen great performance from 22 to 2300, if I'm not mistaken, on TCS to about 2800. Whereas on the flip side, Infosys, because of the issues, now a thing of the past. I think the confidence has to be regained. On HCL Tech too, I think they have been consistent performer, and there has not been anything that has actually come as a extra baggage with HCL Tech. So my view is that we remain equally positive on all the three companies. But if you ask me where there could be a little bit of more outperformance over the next maybe couple of quarters, then I think because Infosys has been consolidating, there is a case of in case if the numbers are better than expectation in the next couple of quarters, then I think the spotlight should be on Infosys.
Right. Well, I'll get closing comments from Sarabjit as well. Sarabjit, what is your take on where the outperformance lies now within the IT sector?
See, to put it in perspective, actually, as I earlier mentioned, most of the IT companies had seen a bit of underperformance, I think, before those buybacks and dividend payouts came out. So I guess after that the stocks have seen quite a run. So if I have to look at FY19 numbers, which I'm not revising in a hurry unless I hear the Q4 commentary, I think for us TCS has a marginal downside because it's already trading at 20 times. Infosys is fairly valued after the strength that it's gained. Left is HCL Tech. So probably if I have to, and probably a company which could surprise from these levels for a long-term investor is Tech Mahindra. So these are our picks for possibly for somebody who's looking at IT right now, possibly HCL Tech and a long-term investor Tech Mahindra.
Okay. Sarabjit, Pankaj, Parang, thank you all for joining us on this Infosys special coverage. For the moment it's time out, and the news from Infosys is that numbers are exactly in line with what markets were penciling in. So there are no fireworks, but the good bit here is that there are no disappointments as well.